Former Dallas Fed President Richard Fisher joins us right now to talk more about all of these moves. He is now senior advisor to Barclays and a CNBC contributor. And Richard, we're kind of scratching our head watching some of these things. It has been pretty phenomenal to see movements, basis points like this, jumping in minutes.
I don't think it's unexpected, Becky. We've talked about this before, but I just want to come back to Steve's comment about hugging the dots. I was a dot for almost 10 years, and Janet Yellen never hugged me. I mean, so
and you're feeling neglected.
I'm feeling neglected and feeling hurt. Look, the most important part is what they're doing for the next meeting, the short-term future. The long-term, it's pure guesswork. And we know where they're going. And they have to slay the inflationary dragon. They let that, just to mix metaphors, they let that horse out of the barn. It's hard to get him back in. And they got work to do. The business of the landing, hard or soft, the greater evil is inflation if you're a central banker. So we've seen these movements. Money was free for so long, Becky, that I think we have a whole slew of investors and advisors that have forgotten when money costs something, the 2-year where you just quoted or the 10-year where it is, there's an opportunity cost in terms of investing in other assets, in equities. So I'm not surprised. I do think we're going to see a 4% 10-year pretty soon, certainly by year end. And we'll just have to see where this goes. The best thing, Becky, for us, and look at the pound this morning, it got to 110. Look at the DXY, as was referred to earlier, 112. I believe, this is my personal view, that the strong dollar is actually holding yields down. And we ought to be grateful for it. We have to finance next year $1.5 trillion new issuance of treasuries. $1 trillion comes out of deficits. $0.5 trillion comes out of the Fed spinning their stuff out of the treasuries, out of the balance sheet. Thankfully, someone's buying it. It's foreign private investors. As China is selling off, Japanese just rolled their treasury bills. We are very fortunate that we're the most attractive country, as was mentioned earlier. And the analogy I use is we're Secretariat at Belmont in 1973. We're 31 lengths ahead of every other country right now. And that's sucking in capital, suppressing yields, in my view.
To that point, Bank of England just raised 50 basis points. Was that yesterday, 2 days ago? Yeah, this week all kind of blends together.
They waited until after the Queen's funeral. That was interesting.
So they just raised 50 basis points, but watching this morning that traders are now putting 50% odds on a 100 basis point hike from the BOE come November. Like, they have some catch up to do. It's going to come quickly. What are the repercussions of all of those moves from other central banks going to be?
Well, first, I think the British pound is weakened in part because of the tax announcements that have been made and then the subsidies they're putting on energy consumption.
By tax hikes, you mean these price caps that they're putting on things that basically they're going to have to pay the difference. They're just not going to have businesses or consumers pay up front.
And then the intention to lower taxes even more.
Right.
So I think part of it's fiscal policy. Fiscal policy everywhere. Countries are spending more, particularly on defense, by the way, thanks to our friend Vladimir Putin. And we're seeing that everywhere. Japanese self-defense forces all the way across to the Europeans, of course. So, again, Europe is really threatened right now. They are probably in outright recession. At the beginning of recession, they were teetering on the bounce even before Russia and Ukraine. Becky, we're the place to be. We're very lucky on that front. It hurts corporate earnings if you're translating back. It hurts our exports. We all know the price of a strong dollar. But right now, we're sucking in capital at a record rate. We'll have to go all the way back to 2012 to see this kind of internal or flows into the U.S. dollar and into the U.S. treasuries.